Welcome back to New Money. We're discussing short-term insurance. My guests are Greg Brits and Shane Pickles. And you'd like to email me, you'll get my details on the screen. I hope you like our new sting. I love it. And, you know, for those who are just watching for the first time this year, maybe you missed last week's program, I'm loving the sting. It's up to match it. They tell me I've got to wear a dark blue shirt to match with the sting. But let's come back to you, Greg. We're talking about body corporates, and we're saying, do people always realize what is the responsibility of a fire policy under a body corporate and your own responsibility? And you, Shane, you made an interesting comment, because Shane said a lot of body corporates don't always collect all their levies, and therefore I think one of the obligations I say to all body people who are part of body corporate, check with your body corporate that the levies are being paid by everyone. Although I don't know if you noticed, there was a ruling last week, a court case, where you can now lock out and turn off electricity of a delinquent body corporate tenant.
Yes.
Okay.
Yeah,
that was one of the big issues.
There was a case ruled on last week, which there'll probably be appeal, but I'm just saying, and I think it's right. But you were going to talk about a couple of experiences you've had.
Yeah, so the big issue we're finding, I mean, the one body corporate I went to the other day, I walked in there, the walls were cracked, the roofs on thing, they've got some plants growing out of the gutters and all the rest of it, but they're assuming that but what I wanted to say was one of the insurers went and did a survey, and they said, no thanks, we don't want to be on risk anymore, just don't want to do this body corporate anymore. And we went to them, and they actually said, oh, we're in trouble. I said, you've got to get your maintenance right. So the insurers are definitely going to get a lot more strict this year. And we are seeing that uptick. I mean, Santam themselves have also, on their financials, said they're also going to be becoming more strict in the fire classes, just to make sure that clients are complying. So that's happening in the body corporate space. It's happening in the commercial space as well. And for a lot of things to do.
Greg, are you saying that although the body corporate pays the premium,
yes,
you as an individual unit holder need to make sure your properties maintained, because if there's a claim, even though you go to the body corporate, they will come and assess your unit separately.
So the responsibility is on the body corporate to maintain the overall complex. So just to
the outside,
yeah,
not the inside.
Not the inside. So the inside, on the fixtures and things, it's still part of the fixtures. So the building policy covers the fixtures in the kitchen. So obviously no loose items if you moved in and whatever, that's part of house contents. But we would cover the kitchen and the carpets in the bedrooms and all the rest of it. So it's still the insides, but you've got to maintain the inside as an individual and the outside. But we are finding the outside, rising damp and water claims. But insurers are definitely getting more strict in that channel as far as maintenance is concerned. In fact, to the point that they're going off risk. They're not saying to you, fix your complex up. They're saying, don't want you anymore. We told you to fix it up last year. We're coming back to survey it this year, and it's looking terrible. So rather, no cover.
Another cost for individuals.
Yeah.
Really
I think just to elaborate there too, Bryan, is that I think Greg will agree is that, you know, with insurance companies and body corporates, the loss ratio needs to be running at roughly 60%, not more than that. Because remember, the insurer still has to pay out commission. There's very little left in the pot. So, and to find body corporates running at 60% can be difficult in the market because of the maintenance issue, claims going through the geysers. That's a big thing. You know, geysers only lasting 5 years on average, and you've got to replace geysers. So the geyser claims are very large when it comes to body corporate claims and their loss ratios.
Well, let me get some emails. My first email is from David in River Club. He says, I've had such hassles from my insurance regarding tyre insurance, which I've insured separately. I've had to pay for the replacements, and they've offered to give me a car, which makes no sense because of the daily cost. Do all insurers behave the same way? Why can't I just go to a reputable tyre company and have it repaired? Shane?
Yeah, I think basically there, Bryan, is for us what
when you have a tyre claim.
A tyre claim, call centre, 24-hour call centre. They would come up with the vehicle on a flatbed if 2 tyres have been damaged. Naturally, if you can't change the 1 tyre, or it might be a lady, unfortunately, is not strong enough to change that 1 tyre. Call the call centre. They'll send a flatbed out, take it to the nearest repairer, have the tyres replaced, and go from there. I'm not too sure how that question rounded up, but yes.
Shane, let me just add a question. I've always known insurers don't like unlucky people or careless people.
Right.
And sometimes you're unlucky, and sometimes you're careless.
Yes.
But let me ask you a question. Do you advise people to have separate tyre insurance? And then does that not go against your claims experience, where you spoke about the importance if you have tyre insurance? Because I mean, when I think about the number of times I drive my car and I've got to be very careful to miss one or two potholes in a particular street where I would never expect there to be potholes.
Yes, correct. Especially after the rainy season.
Yeah.
When there's rain,
Yeah.
potholes are covered and you're going to hit them.
Yeah.
So, yeah, to have a separate policy, some policies do incorporate it. There are other policies that have it separately because the excesses are lower. So with a lot of insurers, if your tyre is damaged, another part of your vehicle needs to be damaged as well. So for instance, the rim needs to be damaged, or the shocks, for instance, once you've hit a pothole, for there to be a valid claim in place. So that's what we find in there.
So would you agree that if you have a separate tyre, it won't go against your overall claims experience, or will it still go against your
No,
claims?
if you've got a separate tyre policy, you can claim it on that, then it won't count against your main policy. But if the rim is damaged and there's additional damage, sure, then it can count against you. We're chatting this morning about that in our meeting. The ladies were saying, so they do recover against the town council.
Do they?
Exactly, but there's a lot of, so what's happened, what we've seen now, and they said there's a lot more information. They want to have the coordinates, a picture of the pothole, and there's about apparently 10 or 15 questions we need answered, and the client doesn't generally stop at the side of the road or take a picture, and it is recoverable. So we are recovering.
You've actually got recoveries.
Against town councils, correct. Because
Can
they're
take a while.
responsible. They're responsible to keep the roads. We understand that they've got, but again, we're trying to keep the cost down. So therefore, if we recover, because I mean, you see what tyres cost. Don't mind the rim and all the rest of it. You could be in for 25 grand in terms of just 2 rims and I mean, we had a Porsche claim the end of last year, and I promise you it was like 315,000 rand, and they just hit one pothole in Mpumalanga.
Okay. Well, Shane, for you, Dirk in Bloemfontein says, could you clarify when it's necessary to have a fire extinguisher at home? I live in a cluster and I'd like to understand the requirements related to fire extinguishers in terms of fire insurance.
So that in complexes again, or in homes, thatch. Thatch is going to be a must where you need to have that fire extinguisher. But even if it's standard brick and tile or standard construction, I would always encourage having an extinguisher of some sort in a kitchen, because that's where most of your fires actually start. So,
but the question here is, I understand being prudent and being careful, but is it a requirement with someone who's got solar and all those things? Is it a requirement to have a fire extinguisher?
So we haven't seen any or much of that at this point in time, because there are certain extinguishers that can put out solar fires, but it takes a while. We've found that river sand is one of these things that are coming into effect where that can put out the fires on the inverters and things like that. But I think time is coming. There's probably going to be more solar losses as time goes on, because it's still fairly new in South Africa, and it's heat. You know, it's all related to heat. These things are working overtime, and we believe load shedding is coming back, or so we've heard. So I think in the near future we're going to see more losses when it comes to solar.
But on the body corporate side, just go back to that. So there is requirements on the external side. So you know the outside, in terms of fire extinguishers and hose reels and that. If you're living in a complex and that, domestic houses hasn't become the norm. Like Shane alluded to, thatch is most thatch risks. If you've got a lap at the back or some room that's covered in thatch, there would generally be a fire extinguisher there. But we have seen a drive where insurers are asking to fit a fire extinguisher, but it's not legislatively required right now in terms of a fire extinguisher. But if your policy is endorsed to say please do it, that obviously will override any legislation.
But I would imagine you would inform the insurer.
Sure.
And not to say read your policy, but to say to them,
yeah, exactly.
Okay, Greg, for you, Ian in Parkview says, please explain the insurance term of insuring new for old.
So that's exactly how
you spoke about values,
correct.
300,000 to $1 million.
Correct.
But I don't think everyone understands new for old.
So new for old is exactly what it's saying. They give you a new item for the old one. So we've been in houses where the guy says, I've inherited this from my parents, and it is 35 years old or whatever the case may be. The policy will respond to give it new, a new couch, a new bed, whatever, anything new. So they will replace. That's the new for old clause. I don't know of any policies. They used to be in the old days with commercial union. They used to have same basis, but now that all the policies now are, you get a new item for an old item. So if something happens in your home, you're entitled, the insurers do pay, and that's why your sum insured's got to be on the new 2025 replacement value. So that's
otherwise obviously average.
Average,
Greg, you've just killed our viewers when they look at you because you look so young, but you mentioned commercial union.
Yeah.
I'll tell you something, unfortunately, you know, our viewers are going to have a different view now. Commercial union, I remember, great company it was in their days.
Yeah.
Rosalind in Hout Bay says, does every policy have the standard excess and then individual excesses for different cover?
Bryan, so you say every product or insurer will have standard excesses, yes, depending, and of course, again, depending on the product that you're on. So we will have certain products where you're over a certain age, no excesses would apply on certain items that you've purchased or insured, should I say. So yes and no to that.
So Shane, if you have a policy and you're older and you don't have an excess, does it pay a policyholder to actually have an excess? Is there some correlation between having an excess or not having excess and premium?
It does help on your loss ratio. So if the minute you've got an excess, obviously if you've had a loss, it does help on the loss ratio point.
But not premium-wise?
Premium-wise, not.
Well, it will, because your loss ratio drives your premium, really. So that's the primary driver of what type of increase you get, 2%, 4%, 6%, 10%, depending on your history. So if you're quick to go to your policy to claim for items that have gone missing, and unfortunately sometimes they do, the insurer at renewal is looking at the primary driver is how have you done in the past year in terms of.
I apologize to Roz and Eddie and Larry and Barry. I'll call you personally on your questions. Short-term insurance is often viewed as a grudge purchase, essential but not always fully understood. However, by identifying what coverage is truly necessary and where you can effectively self-insure, you may be able to reduce your premiums. It's important to have a conversation with your short-term broker to explain these options. Greg, Shane, I'd like to thank you for joining me this evening.
Pleasure.
It's important to note our program this evening is to provide information and should not be construed as advice. Next week's program we'll be dealing with estate planning, and if you need to get hold of me, my details will appear on the screen. Thank you for watching and good night.